Good day, Divergence traders. How we all doing today? Today is Thursday, August 31st. When you see that we're in the month of September, I always think to myself, oh, summer's over, summer's gone. Actually, summer was over and gone like 2-3 weeks ago. We had one of those weird years here. We did not get any extensive heat waves. So I don't know what the hell they're talking about. Climate change sounds like a bunch of horse pucky to me. Yeah, it's real funny. They said it was going to be like crazy hot that we would boil to death about a month ago. And it was just nice and warm outside. That's it. Well, we weren't boiling. No, we weren't boiling. But anyway, and now here in Canada, the low this morning was like 9 degrees or something like that. Like, trust me, that's in the 60s down in the United States of America. Very, very cold. Yes, very cold. If there's anything that might happen, maybe we're going to see extreme cold temperatures from here on in through the winter, through our winter, the dark winter of lots of darkness and lots of cold. Brr, 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 brr. Okay, anyway, we're looking at the NASDAQ. Let's check out some setups here. We're looking at the NASDAQ. We're on the 5-minute chart. It wasn't a very good day today, you got to admit. There was divergence, though. Not when you wanted to trade it. Here's the U.S. session right here. It's just a bunch of horse pucky. So anyway, we had a double bottom right here. Okay. That is coming out of the UK session. And just wanted to show you because there's just pullback trades over here. So you would have got long right here. Okay, your stop was at the closest swing low. This is the NASDAQ, 18-point stop. So we're looking for an 18-point target. We didn't get it there, but we got it right there. Okay, but it went up 50 points. Okay, then we had what? We had a high, a retracement, and a higher high, ladies and gentlemen. So where would you sell it? Well, you'd sell the retracement right in here. Get in on the trade. Because the news proved to you it wanted to go down with this long wick. You know, first it crashed down there, then it went up there, then it came and it closed lower. So that's like a signal to take it short. Or some people might look at it like, oh, look at the long wick. Look, all the buyers took control of that. They pushed out the sellers and pushed it back up. So they might think that's bullish, you know? There's all different kinds of reasons why people think the market's going up or the market's going down. Yes, indeed. And if you're unsure, all that I would have done is waited for the next 5 minutes. You can see it closed down here. And then the next retracement back up into the 5, into the trade zone, into here. Okay, was right here. Or if you waited for these higher closing candles, you would have sold it up here. Okay, this is a scalp trade now. It's not our, measuring from here. It's a little scalp trade, okay? And it went down 25 points. But if you measured it this way, you would have never got it because your stop was too big. But if you got in up here somewhere, your stop would be 22 points, and you would have got that. You would have got it in the next, 15 minutes from there, okay? Then we had a low, and we had a retracement, and a lower low. That's all qualifying, okay? But down here, no. It doesn't qualify. It's going down. It's going down like that's going down. We need this to go up. So there was no divergence right here, ladies and gentlemen, to buy it up. However, there was dips along this grind to buy it and make points. So, lower closing candle right here. Okay, came down to the 5. Buy it, up it goes. Another lower closing candle right here, close to the 5. Buy it, up it goes. Here's another lower closing candle, but it's far from the 5. I would wait for price to come back into the 5 and buy it. Okay? And it went against you a little bit, and then it went up. And then right here, see this one? Closed right near the 5. Closed lower. Lower close. Up it goes. Yes, indeed. Okay. That was your trades today. Buying dips in here. Buy the dip, up it goes. Buy the dip, up it goes. Buy the dip right here, and up it goes. That was the trades of today. Okay, let's look at the Dow now. Okay, we did have a nice trade with the Dow. Very nice trade. So we had a high, we had a retracement, and we had a higher high here. We could even put it here. Okay, just like that. And from here to here like that, that's divergent. So you would have got in down here after the 5 crossed down. You wouldn't have got in up here because they went up and they took out the stops. They went digging for gold and they found some gold. Trust me. This is where people would put their stop. They would sell it up here and put their stop right here. And then after they hit the stop, they go, oh, damn, why did I do that? But with my system, okay, the moving averages tell you when to get in. They don't say, oh, just assume to think it's going to go down from here and jump in. No, you had the 5 cross down below the 7, okay, and price closing lower below the 2 moving averages. That's why those moving averages are on there, ladies and gentlemen. They're not there for show or anything, you know, stupider than that, okay? They're in there for a reason. I don't get in the trade until price and the moving average have either crossed down and closed down or crossed up and closed up there. You see what I mean? That's right. And here is that same trade with the Dow. We have a double bottom right there. Let me show you. Okay. Double bottom right there. You would have bought in here. Okay. Right there or somewhere in here on the pullback. And yeah, it went against you and scared you. Your stop would be right here. That's where your stop would be. And they would have come after you, and then they took it up very nicely. You could have made a nice profit. I know I kind of started doing this one and skipped over to this one. I'm sorry. Here's the entry on this one. So if you got short right here, your stop would be 50 points. And it went down 41 points there. Came back up, freaked you out, came back down. There's your 50 points right there. How far did it go down? Look at that. Went down 105 points. There's 2-to-1 win-loss ratio. But as you know, I only go for 1-to-1. And I told you the reasons why. I could say it again quickly. The market chops and turns corners 80% of the time. And the other 20%, it might do a very long trend. So don't bet your money on those long shots because you got about a 90% chance it isn't going to work. But if you go for your 1-to-1, you're doing good. You got to keep doing them though to get your winning average up. Okay, let's look at the S. Oh, look, it finally comes down. You bastard. Right when I'm doing the video, I was waiting for this trade here on the S and the P. And of course it does it after I start the video. Yeah, of course. Double top. Ding, ding. Yeah, yeah. Fook you. Fook you, man. I didn't do one trade today. You can see with the green line there, it's a double top. Here it is again. See? Right there. Mode C. And right there, see? Just like that. Down it goes. You would have entered right here, right now. I'm not going to stop the video to do the trade now. It already did the move right down to support there. See? Went down 5 points. You bitches. Yeah, I don't even want to talk anymore about that instrument. We're sitting there waiting all that time, and this is what happens. Okay, let's look at oil. Oil really went up there today. Yes, indeed. Where's the trade? It's right here. Very easy to see right there. Get long. Buy it. Up it goes. 58 ticks, 58 points, 58 pips. That's where she went. And your stop would have been right here, 20 points. 20 ticks, you would have got your 2.5 win-loss ratio if you got out up here. Okay, let's take a look at gold now. Oh, gold is choppy again today, you bastards. Yeah, I've always found it very difficult to trade gold. I pretty much stay away from it myself, but I show it on here on my channel because some days it moves, and it can move hundreds and hundreds of points is why I show it. What you got to find is you got to find something that you like to trade. You know its temperament. You have gut feeling. You get gut feelings about where it's going, and keep trading that same instrument. What's winning for you? You don't need to trade 5 or 7 instruments, okay? You only need to trade 1 or 2 or 3, whatever you want to do. You don't have to trade 7 of them or so. I cover, let's see, how many do I cover? 1, 2, 3, 4, 5, 6, 7. I cover 8 of them, okay? Do I trade all 8 of them? No. I'm just showing you what moves I'm covering it so that you can see all the different divergence setups, okay? I don't see no divergence here, ladies and gentlemen. It's just a fook up. But it went down. Let's look at the pound yen. Oh, look at the pound yen tanking now. Okay. Was there divergence up here to sell it? No, because this mountain peak is higher than this one, and it needs to be lower. This needs to be like down here for it to be divergent, and it's not. The price followed the indicator, or the indicator followed the price, I should say. So all that you do have is a cross down, okay, over here. This is just chopping. And if you would have got in on a pullback right here, down it goes. Up, higher close, down it goes, right? There you go. Let's look at the EJ, the Euro yen. Oh, we have a trade on the EJ. Look at that. Double top. Beautiful double top. Right there. And right there. And you would have got short right there. Your stop would be 15.5 points. And now it's gone down 57 points. Okay? Let's take a look at the pound dollar now. It's not looking good either. I know. It's just grinding. It's grinding because the pound is probably going one direction and the yen Or I mean, and the US dollar's going another, I don't know, it's grinding really bad. That's right, we're looking at the pound dollar, not the pound yen. I don't see no trade here, ladies and gentlemen. Do you? Well, there's actually one right here, starting now. So we have a low, we have a retracement, and we have a lower low. Let's see. Yeah, there's a trade there. So you gotta wait. It's 5 minute. I always wait for the candle to close and to make sure that the 5 is above the 7. It's not going to close for another 2 minutes yet. I don't just jump in. There's times I've jumped in not waiting. Guess what happens in the last few seconds of the candle? Oh, it crashes right back down. They buy fake you. Yeah. That still can happen even like a couple of minutes after this candle closes, your trigger candle. This is the trigger candle, but who knows where it's going to go. See right here? 0.102. That's 0.1 of a pip. Back when I started trading Forex in 2005, the pound dollar was anywhere between 4 and 6 pip spread. And now they're like 0.1 of 1 pip. Big difference. There's the signal to go long, or you wait for the pullback to the 5 and then you go long. Anyway, once again, my name is Jason Sweezy. I am a divergence trader. Love divergence. Love it with a passion. Love the charts. That's why I do this channel every day. I'm just here to share and hopefully help all you traders. You know, if you could please be so kind to hit the like button. It's free to like, as they say, and subscribe if you haven't subscribed so I can see you here tomorrow in the next video. So, thank you for listening. Thank you for watching. Good luck and good trading.